give me one moment, guys. All right, sorry about that. This is a rough start. Let me get my voice. All right, get my screen shared for you guys in the chat. Good morning, good morning. How's everybody doing? All right, can you guys see my screen? I hope so. All right, thank you, Chris and Charlie. Appreciate it. All right, let me click all the buttons. So today is going to be one of the 2 days left where we can get some somewhat quality trades. I don't expect tomorrow to be super eventful. So let's go ahead and just clear out our watch list from yesterday. I'm just going to walk through this methodically here. Do the same thing every day. All right, so I want you to quick watch stream. Yeah, fair enough. All right, so we've, let me make sure I'm not muted as well. Okay. All right, so we got our pre-market list here. I don't see a lot today. I see RUBI. I'm just going to kick this over to the 2 minute. This one looks okay, but it's kind of the only one I see. The rest of these are kind of garbagey. So that's why I'm like, it's got the setup, but this volume is trash and it's heavily diluted. It's 96.19 million free float with 5 times that in restricted shares. So a total of almost 600 million shares outstanding. So they could very easily drop an offering. It's a $71 stock up from $55. I don't trust this. And this move here happened in about 145K. So don't like that. Recent candles are about 70, like 1,200 to 7,000 volume. So kind of trash, right? Not going to touch that one. CETY is one of the tried and true. We like this one. It's a low float stock. It's getting a bunch of volume, but I'm going to wait for it to kind of breathe a little bit first. I don't want to just jump into that. KSS, one of my favorites. It's a little more diluted, but it's got a good, it's got a good price behavior on it. But it's 19, 20 bucks. So I'm not going to be trading too much of that. I'm just going to put that on the list just to have it. BNED is trash right now. There's nothing I can really use on that. WSHP is literally up on 377 volume. So that's just a $9 bid-ask spread. So I'm not trading that one today. So yeah, it's going to be one of those days where it's kind of bad. This one has the exact same chart as KSS. If we jump back over to that one, you can see it's the same stuff, just wearing a different mask. LNAI looks like it's got probably the second best potential on this chart. It's got about a half of the volume to market cap ratio so far. It's in my price point range, but it needs just a little more volume and then it needs to be directional. So good setup, decent enough volume for now to watch, and it's in the price point. And I think that's probably going to be the one that I look at. So ICON here, it's got a good volume to market cap ratio. Where did it go? Right here. It's 5.64 to 2.03. The problem here is that it's $1.06, which is fine, but it doesn't have consistent volume. So I don't want to touch this one just yet. So I'll keep an eye on these in the pre-market. We're about to enter auction cross here in about 6 minutes, so we'll keep an eye on that, but we'll see how it goes. I think I'm good with just these 4 for now. We'll kind of check back here once the auction cross starts, and we'll see if we can get something going here. I'm going to do something a little different today. I'm going to use $50 positions, and my goal is just to get like $3. So let's figure out what is my 1.5%. So 186.54. I'll just move this over here. Plus 1.5% is going to be $2.80. So I just got to get this up like $3. I think I can do that with 2 $50 buys. And that we can even make this a little bit more mechanical, right? So if I'm using 2 $50 buys with a third plus 36 left over, that just means I need $1.50 on each, which is pretty easy to get, I would say, or pretty consistently achievable. Can't say it's easy legally, but it's consistent enough that we can get those. They're relatively common. It's just a matter of waiting and catching the right shot. Oh, hey, alarm clock, how you doing, buddy? I am going to take a sip while I'm waiting, and I'm also going to keep an eye on CETY because that is starting to show some little bit of absorption up here. Yeah, exactly, Charlie. Trash. And Porter too. Trash. So much trash today. It's trash collection day. But that's okay because I don't really have to care too much. I just need to choose whether or not I even want to trade. Right, that's always a choice too. We don't have to take any risk if we don't want to. I do because I've been doing this for a decade and a half, and I'm okay with it. But if you're a new trader and days like this tend to just destroy you, then you don't have to trade on days like this, And that's the cool part, is you don't have to do anything you don't want to do in the market, including allow stuff to sell down, If you bought here, for example, waiting, and you were looking for a break out of this to the upside, but it's going down, you don't have to tolerate that. You've got a couple levels here that you can just choose to cut it and then just re-enter it when it comes back up. That's always a choice. And that's a choice most traders don't give themselves because they want the big profits, so they expect to let it go in both directions just as far. So I'm just going to keep an eye on CETY. I'm not going to touch anything pre-market, I don't think, unless I see something that I really like and have conviction in. The only one I'm kind of watching for that would be RUBI. Now it is right within my threshold of the $50 position, so I'd be able to get maybe like 200 shares of this. But again, kind of trash, right? So there's just not good volume on these. So I'm just going to kind of hang out, see where stuff goes. LNAI wants to catch a little support. There's a little fib situation here. We're below the 50 to 61.8% fib on this, by the way. If I draw this out, we're below the box. Just again, I could eyeball that stuff, but it's kind of acceptable. But I don't like it here. It's just not there yet. So we'll see where it goes. All right, so let me just kind of peek around here. Looks like we're getting a shallow retrace on CETY. Of course, that means, that's what happens on days like this. You're going to get the volume. It's just going to move like a big herd. It's going to go from one ticker to one ticker, and things are just going to kind of fly around, in a big group. And then if you're getting in when the group is getting in, you're great. You'll probably catch a nice run because that's where all the volume is going to go. If you don't, and you don't get out when everyone else gets out or before everyone else gets out, you're going to have a hard time because you're going to be catching it on the way down. So it's not so much a guess and time thing as it is watch for objective data and then don't live in denial if you get it wrong. And that's how you navigate days like today. You have to look at the volume and you have to treat it like a stream. You don't want to jump in when the stream is going the wrong direction. Otherwise, you're going to get swept out. So we just got to wait. The only one I see that has promise right now is CETY, and it is super sketchy up here. And I'm not going to trade it pre-market because stop losses don't work pre-market. And something like this with 3.5 million float can easily sell off 10-15% in seconds if you don't catch it. And then you're trying to catch that sell order all the way down and wondering why you're not the one that's getting filled. And then it's just not a good time. And then you start off your day with a disaster. So I'm going to wait. And that is CETY. RUBI is kind of showing a little bit of potential here, but I think the best potential on this one's going to be down here, personally. I think that's a nice solid level. Now you've got these little, intermediary levels down here. Like this counts, right? It's just a little wider than I'd like it to be, which, if you've dated before, I'm just kidding. So yeah, this is kind of an opportunity zone, but this one down here is going to be the best structural zone, only if it actually has a reaction. So on CETY, we don't have that. We don't have a zone like that. So I'd have to even come down to like the 1 minute, and I don't see anything there either. So not going to be chasing that one. So for this one, for example, if I put $50 on, then I would need to get roughly 3 to 6% profit. So if, let's say if I grabbed it like right here, for example, I would need that much range minimum to make my goal of $1.50 on that $50 position. So, you know, it's a little sketchy pre-market. I'm going to get one ready for this just in case, but even this one I don't really like, right? I prefer the order book and stuff on this one, but I don't trust it. So I'm going to have to wait until it breaks over. And if I miss it, I miss it. That's okay too. This is RUBI. Let me put these tickers in the chat as well. And this list will probably change because, again, it's one of those days where the price kind of migrates, the participation in the market migrates as a herd. So I have to be careful with it. So I like this. I like what it's doing here. I could take an entry here if I wanted to risk it. I think I might actually because I like the volume that's coming in. I'm going to wait just a little bit longer and see if we can get a little bit more strength in there. Not quite convinced. It has to sell me, basically, is what happened in there. Yeah, it's not able to get over 24.90. It's got a $1.50 spread on it, basically. So I think I'm going to just hang out on this one. And also, disclaimer time, as always, you know, don't copy me. Like, don't blindly copy me. I'm trading what I trade to show you guys how I do this, not to show you what I'm trading, right? So there's a small cash account so that it's relatable for you guys, so I can show you realistic, achievable results. It's not meant for you guys to just blindly copy Pookie and then, you know, because if my internet gets cut off, you know, what are you going to do with your money, right? So I don't want you guys to fall into that trap. Plus, you're here to learn, you know. I'd rather have you guys build the confidence and skill set to do this on your own so that you're not relying on someone like me, you know, to make your money work for you. Yeah, this one's not quite ready yet. We are an auction cross. I don't see too much else going on here as far as volume creep. INHD is getting a good set of volume there, but I can't trust that chart. Not just yet. It's got a good setup. I feel like this is what top would be all over, but I can't trust it. And then, yeah, that's pretty much it. ICON is the only other one that's like starting to show promise volume-wise, but it's garbage. You know, it's a $1.09 stock, which is great. It's got a 1 to 2 volume to market cap ratio. I'm going to add it to my list, but stuff's got to move, you know. We're past 24.40. Yeah, okay. So I'm going to grab a little piece of this going into pre-market. Now, this is super risky. All right, I'm grabbing this into pre-market, so we got to be very careful about this. So I'm immediately setting up my sell order. And because we're grabbing it into pre-market or into market open, that means that I'm going to have potential volatility. So high risk setup here. And then I just want to peek over at ICON here really quick because that's another one that I want to kind of peek on. All right, so we're about 0.5% up on this one. Not the best, not the worst. We'll see where it goes. We got 1 minute till market open. And then let's see, remember, 0.24 plus 3%. My minimum is going to be 24.72. So let's see if I can mark that out. So I'd like to get over that line and then lock at least most of the shares, if and only if the volume comes in. So we're going to open in about 40 seconds. This could very easily blast down. I am okay adding more to this one specifically if I want to, but that is always a case-by-case basis, and I don't want it to go super far down because it's a 24-cent stock. So gotta be very careful with these. Really quick, we got 20 seconds. Let me just peek over at CETY, and then RUBI is the one we're in. Just gonna do a little bit of shopping here. So this one, you know, it's wanting to go, but this zone is trash. So if it goes, that's great. I don't care. I don't need to be part of it. ICON and then LNAI. All right. So CETY is definitely getting the best volume. RUBI is getting the best range. So market is now open. Got my hotkeys ready. Just going to change this over to that. All right. And then we'll see what we get here. So high risk stuff. I don't want anyone to jump in anything blindly just yet. All right. We're at 4% on this one. So I'm going to lock my profits here on that one pretty soon. That's RUBI. I'm going to swap back over to CETY if I can. Just see where it goes. All right, that one's going to pull down, I think. No need to fight that. All right, so I still like the volume profile on this. Still seeing a lot of juice here. The order book is nice. We do have a giant wall down here on the bid at 23, though, so I got to be careful about that. But I like the heartbeat here. I like the fact that we keep stalling high like this, and we just got to get that breakout. So I think once we get over this, we should be off to the races for a much bigger move. And let's see if we get it. And again, if you're newer, if you don't want to deal with all that uncertainty, you could have very easily just locked those profits right over that line and just been done with it. Okay. So again, don't copy me. All right. I'm showing you guys what I do, but that doesn't mean that you have to do that. That small, consistent base hit being locked in every day consistently definitely adds up nicely. I like this one, but it needs more volume. LNAI has got a good setup too, but it needs volume. So CETY and RUBI are going to be the favored childs right now. And remember, my goal overall is just to get like 1.5% for the day. If I could just get that and be done, I'm happy. I don't need to be doing all kinds of crazy stuff. So we've got 4 out of 5 candle runs set up here so far. Just going to set a line right there. And then we need that 5th candle to close. And then, if we get a breakout ahead of time, that's great. But that's going to be a super short-lived take profit on that one. So I'm just going to keep my hotkey ready just in case. There's a nice heartbeat on that. Stall on high. I like that. It just needs that little bit of volume nudge. And then that one will be good for potential continuation. Good setup on the order book. I like that. There we go. So I'm going to grab my piece right there. And this is pretty high risk. We're grabbing a top here, so we got to be very careful. Because we don't want these to fall back down to the depths of hell, So we're just catching the volume as it's here. And when it stops being here, we kind of need to be mindful of that because I don't want to keep adding a bunch of money to these. Like RUBI, for example, is pulling down a little bit. It's coming back and retesting our box. So this one, if that pulls back, it can come all the way down here to like $1.20, and I don't want to be in that. So just looking for quick little pops on these. If I can get a 3 to 6%, that's great. I didn't take it on RUBI, but that's okay. I'm looking for a bigger move on that one personally, but it was there, right? All right, we're about to push over pre-market high on CETY. There's a nice heartbeat and a stall, right? There's a stall. Now we just need a quick pop over that 184 level if it wants to give it to us. There's a lot of strength on this one. Jeez. It just has to be sustained strength. As soon as that strength starts to ebb out, then we run into complications. So far we're seeing increasing volume, which is good. So there should be a lot of hype on these. And right now, these two are kind of competing for volume, right? Remember, the volume moves as a herd. These are the top two, and it's kind of a sparse day in the market. So all the volume is going to look to consolidate into 1 or 2 spots. Fortunately, I have both. So looking for one quick rip, and then I can lock these and probably be done for the day. I don't want to do too much today. So let's peek over here at RUBI. That one's kind of pulling back up out of the zone. That's great. That's all I care about. I just want it to get out of the zone in the direction that makes me money. CETY is showing a little bit of downside so far, but it was down here before. Let's see if it wants to pull back up, and if we get a nice buy up on that, will be great. Otherwise, I might take a hit on this one. So I'm just going to let it. I'm going to let it breathe. But again, this is a choice. We don't ever have to let things pull down if we don't want to. Well, we're getting a little bit of a break over here on RUBI. So this is kind of that response to the response. I don't want this to halt though either. It's 8, 9, 10. I'm going to lock 2/3 of my shares right there. My control 2. That's a 6% profit on that. Then we got this pre-market high 26.29. I don't see any reason why we shouldn't just pop over that with that kind of strength. Nope. Let's see if we get a sustained move. Yeah, that sustains. All right. So I'm out of that one. So that kind of offset this huge drawdown, right? So we got this 11%, 12% move to the downside on this one, which is likely to get bought back up. So when that happens, I just got to lock those profits sooner, and then we'll be fine. So remember, my goal overall is just to get 1.5% for the day. So I'm pretty well on track for that. And then here comes the buy up on this one. Remember, it's just the volume is shuffling around. It's like a herd. All right, locking 75% there if I can get filled. So I got my hotkey set up to sell 75% of my shares and then close the shares. So we'll see if that rally can sustain. It looks like there's plenty of juice on this one. Actually, I might cancel this one for a higher move, which is something I don't normally do, but I'm looking at this order book here, and this ask is stacked for chain fills. So another pop like that, I think we'll pop over 2 pretty easily. Let me just map that level out. There we go. That's going to be kind of my bigger. So I'm going to probably lock 75% somewhere up here, and then the remainder over $2. And then I'm just walking away. Right? I'm over my 1.5% for the day. I can leave at this point, move on with my day. Right? I don't need to deal with anything else after that. It's not an ego thing at this point. I don't need to be right. I don't need to be validated. I've made my money for the day. I could just close shop and live the rest of my life without staring at charts. So with that said, I'm actually just going to do that there. Not because I'm trying to prove a point, because I saw a shift in the order book, and I don't like necessarily being exposed when I see that. This may still pop. It should still pop, but I don't like the order book just shifting like that. And if you watch the recording, you'll see these walls were farther apart. And there were also fewer smaller walls on the bid. And what they've done now is they've kind of shuffled over, and now they're closer together, bigger on the ask side, which is great for those chain fills. And now they're starting to spread apart after I'm out. Look at that. So that's fine. I don't care if I get manipulated out a little bit. I don't want to run into a cluster of walls like that are too close together, because that is where you tend to see absorption, and I don't want to get stuck in that. So basically heading into something that I don't see happening the way that I expect it to happen, knowing that there's potential for those profits to go away, I'm just going to walk away, right? It's not an A+ setup at that point. So it's a little more nuanced because it's the order book, but it's a really good example to show that it's okay to just let profits go sometimes. It doesn't, like, you don't have to catch every drop, you know? So with that said, you know, we had a little bit of volatility on this one, but we did get our buy up, just like we got our buy up on RUBI. This one went all the way up to this zone here and then saw some rejection, 28.61. I obviously sold at a lower price point, and that's okay. I don't need to beat myself up for this, because if I look, let's look at something from, I'm sure there's one from yesterday over here. There's always one from yesterday. I think IVF. No, not IVF. Anyway, what did I trade yesterday? Got these here. ENLV. Yeah, like ENLV, right? If I didn't exit this one, that would have been yikes town, right? So, you know, yesterday we bought this one. We came down to the zone again. We pushed and I sold, and then we waited for the zone to get invalidated, and I sold on that one as well. So partial profit, right? I got some profit on on most of the shares to guarantee a net profit overall. Took a loss on the remaining shares, and then the rest of the day I didn't hold and stare at the chart and put in extra effort and extra work, because today, if I did, I'd still be struggling with that. And oh, what should I do? I'm gonna go ask Lee, should I buy or should I keep holding this? And that's where we hurt ourselves. So if you don't want to hurt yourself, the best thing you can do is just stop living in denial. And when something's going against you, you can cut it. There's a lot of power in that. You don't have to hold everything. That doesn't mean that things won't still, hit your targets and stuff. It just means that you have a right to withdraw your exposure at any time. And that's your job. Your job is to revoke your exposure in one direction or the other. So, this one's so far respecting the levels I drew, and that's fine. I don't care. My part is done. I don't have to keep working. But I'm on a live stream and I'm trying to show you guys how to do stuff and what to do. So I'm going to keep doing that. So if we wanted to, let's say CETY, we've got a 5 candle that didn't finish forming here on the 1 minute. So that tells me there's still some bullish strength. And basically what that means is that in order for a 5 candle to form, we should see, there we go, we hit our $2 threshold. In order to see a 5 candle run develop, like right here, for example, we've got a 5 candle run right there. And that's kind of where I got in. It was just a nice little confluence. We need to look at the highs of each of 5 or more wicks in sequence, right? So if I zoom in, you can see any set of 5 candles will have this condition met or they will not. And an equal high counts as a lower high. This is for catching bullish breakouts, right? Or bounce plays specifically. So those who have been on my streams, you guys already know this stuff. You guys are a lot of you guys are already using it, and it's okay. But I want to show that it doesn't matter what specific pieces you use for a strategy. They all have the same bones, right? So in this case, all 5 of these candles match that criteria. All 5 of these, all 5 of these, all 5 of these, all 5 of these. And then that should have been lowered, but I drew the line after. And then this one here breaks over this 5th high right here, right? 1, 2, 3, 4. And then instead of the 5th one being lower, it broke over. And then that's the kind of trade that we can get into if we want to endure that kind. Like we could have easily set the stop loss at the low of this candle as well. But I was using a slightly different strategy on that one. So I allowed the drawdown and I happened to go back up. They don't always do that, right? So now we've got, if you're looking for take profit on this, you've got 1, 2, 3, and then a 4th one forming, but you don't have a 5th. So you need this candle plus the next candle to both have higher lows than the candle before. And then you can put your stop loss in place to allow this big impulse to continue moving if you want to let profits breathe farther. Now, I'm not doing that because I wanted to lock all the profits and just get out of it because I saw the order book shift. So that's okay, right? There's many different forks on this tree that we can climb on. So in this case, let's watch this one and we can see where we would have taken profit if we had scaled out. So I didn't scale out. I just sold everything. But basically a good rule of thumb here, let me just, where did I buy this one? It was CETY. I bought at 179. So let me just mark that level. I think I just got to move that line back to where it was, 179. So that's where I bought right there. And then let's say we got a 1.5 to 2%, just a nice achievable target close by. That's where we lock most of the profit. So most of the shares get locked pretty close, pretty tight, just to pay ourselves interest on the remaining runners and guarantee a net profit overall. And then we've got this setup here, right? We can use a higher low, we can stop out and re-enter, we can do all this stuff, whatever we want to do. But right now I'm looking for a set of 5 candles that has higher lows. So 1, 2, 3, 4, 5. So I have that. So now what I would do if I had any shares left is I would put a partial stop in place because this is an impulse. So if the price breaks below 214, I would sell another 75% of my shares, whatever I had remaining. So if I had, 100 shares and then I sold 75, I'd have 25 shares remaining. I would sell 75% of those 25 at 213 as a stop loss. And then I would still have the remaining 25% of those 25%, so 12 shares, remaining for a bigger move after we get a higher validated low. So right here, you would have locked in that second chunk of shares if you use that strategy, right? And it's just a way to make it a little bit more mechanical so that we're not trying to guess and we're not relying on intuition, because it's great to have, but it's not sustainable if you want to be a trader. You got to have a system in place that makes sense. So in this case, you would have locked, 75% of your shares nice and tight, kind of like we did. And then you would have let the impulse move. And if you see a big move like this, you can always sell some more shares anywhere along the way. It's always a choice. And then you get this 5 candle impulse here that ends. It gets terminated right here. So you would have sold another chunk of shares if you didn't sell anything like right here. And then right now, since we are starting to get lower lows on the candles, we can look for a higher validated low to form and then move that overall stop loss up on the remainder of the shares. Does that make sense? And I know everyone who's been on my streams is probably tired of hearing me walk through it, but it's a nice, easy way to just let the chart tell you what to do so you're not trying to guess and impose your will. Because that's where we mess ourselves up. Let me take a drink while I'm waiting for you guys. That's some good juice. All right, so this candle here becomes a candidate. Let me open up Miro and you guys can see. I'm going to do this every time I can, every chance I get. All right. I canceled my Miro because I don't draw anything new. I just use these for reference. So it keeps popping up with these notifications. So these are the these are the 3 forms of exit, right? Here's that initial predetermined ratio take profit. That's what we did. Where you just grab some value of your risk and then you multiply it and then you secure your profits at that range. Okay, we did that. Then the other portion right here is for another 75%. And that's kind of what we're watching right here. This 5 candle setup, 1, 2, 3, 4, 5. And then the 6 candle breaks below, 1, 2, 3, 4, 5. And then the 6 candle breaks below. So we sell 75% of the shares at that point. Now we're heading into this territory, where we see the middle candle out of 5 candles unchallenged on either side. So 2 candles on the left with higher lows, 2 candles on the right with higher lows. Oops, ChatGPT. This is so far a candidate for that. If this candle here can close in 45 seconds without breaking below this guy right here, we will have a hard stop that we can then use as a higher swing low effectively. And that can allow for another impulse to happen off that zone. So these chain together is what I'm getting at. So if I were to draw these out right here, I can't move it because it's locked. Oh, well, but they chain together. So another 17 seconds and then we'll have a hard stop in place right here at 208 minus 1 cent, obviously. So 207. So we'll just watch and see where this goes in the next 5 seconds. It's likely going to stay up, but we'll see what actually happens. All right, so it closed. Therefore, this higher validated low gets locked in. And then you've got your entry down here. You've got an initial take profit where you sell most of the shares, maybe an impulse sell. You got the 5 candle rule right here. And then you've got a higher validated low for continuation to the upside after this pullback. And the logic behind this is saying, between these two, is saying that, okay, well, if the candle wants to make higher lows from candle to candle, that's a bullish impulse. I'm going to let it breathe until it stops. And then once it stops, we lock it in, we choke out those profits, and we just secure them before it goes all the way down and gives that impulse back. Because impulse up, impulse down. And then this one here is a swing low that is ideally higher, where we say, okay, well, they had the opportunity to push the price lower. They had the opportunity to, cause a reversal to the downside, but instead, the ask side pressure stepped in, pulled the price back up. So if it comes back down here and breaks below this level, I don't want to be in it because this was the farthest they were able to push it. So if it goes any more than that, I don't want to be part of that. So that's why we do a hard stop at that point. So now we've got another impulse candle. So we can lock our profits at any point on these bigger candles. We can just take little pieces of it and just lock it in if we want. Now I don't have any more shares, so I'm not trading anymore today. I don't want to give these profits back. So we'll see. We'll see where it goes. Does that make sense? Those two patterns? You're just looking at 5 candles at a time. It's pretty straightforward. And on Webull, if you want to, you can actually zoom. If you zoom all the way in, you'll see 5 candles in the viewport at all times. So if I go here, there's 5 candles. If I go here, there's 5 candles. Oh, this one matches a pattern, right? Because I can just look at that middle candle and say, all right, well, it matches this setup or it doesn't, right? So now I'm looking at these 5. these 5 here that are closed, they don't match a pattern. I see 1, 2, 3 for a potential 5 candle, which is great, but I need 2 more candles. I also need a new mouse. This wheel is jacked up. It keeps jittering, and I like that. Does that make sense though? Charlie says, I got 1 runner against my comfort zone. I stayed in, letting it breathe is hard. That's good. So you weren't on the stream yesterday in Lifetime, but that's perfect. We talked about kind of sitting with discomfort and the kind of how the brain works. I don't want to go down that rabbit hole, but you guys know I love me some neuroscience. Charlie says, it helps every time you walk through it. Helps check my process. Okay. And that, like I said, everybody's pieces are going to be different, but the bones should be the same. You should have a portfolio structure. You should be financially secure outside the market, and you should be making consistent contributions, in my opinion. Inside the portfolio, within that structure, you should have position allocations, which means you know exactly how many dollars you're going to commit to each type of trade. You're going to have a plan for how many buys you're going to place and what size they'll be, as well as your sells. And then within that, you should have a technical analysis strategy, a very simple one, where the chart is telling you when to push the buy and sell buttons. That way, you're just kind of following a system like an employee at a company. You're not trying to go in there and say, I mastered the market. I think this is going to go up, and I want to be right, and I want to be compensated, so I'm going to push a bunch of buttons. Because that doesn't work. You can try it. But I'll tell you, I've tried it. It doesn't work. You have to use objective stuff, and you have to be willing and humble enough to let the chart tell you when it's time to push buttons. LNA is starting to warm up. Let's take a look. Yeah, I can see it. Let me kick up here to the 2-minute. That's a pretty decent move there, but it's got to get through this garbage, right? Because remember, up here, the last move that we got up here and the strongest move we got up here was this. So it's not a bad setup, but we can trade. Right now, you're just seeing a reversion. You know, you got a fib retrace right here. So it's got to break above that, and then it's got to push up there if you want the risk reward to be worth it. Because right now, unless you want to, again, if you're just getting that small percent profit that you can achieve over and over and over again, I mean, in most cases, you could just grab any bullish candle and then sell in the next bullish candle and probably get 1% in most cases. Don't tell anyone I said that, but but that's usually kind of a somewhat easy way to trade. Of course, you got to have a stop loss in place, but you know, on stuff like this where it's the lower cost stuff below like $5-10, but above $1, right? You can usually get those pretty easy moves kind of anywhere. But if you're looking for bigger moves, bigger you know, pushes in price, then you've got you know, obviously you have this wedge here. It broke. You're looking at the retest if it gets up to here. But you've also kind of got this chop zone right in the middle where it's just got to get through. And then you've got another consolidation zone right here before it reversed. So that's good. I mean, you could trade this little ping pong action right here between like 145 and maybe 152. But there's still really crappy volume. So we'll keep an eye on that one, though. That's a good one for like when the volume comes in. Stuff like that can really get moving. But if the volume doesn't come in and sustain, it ain't going nowhere because they're going to keep it price locked. And you can see there's zone recovery algos on this. Those big walls. There's at least 2 algos. So you got this guy, and then you've got, there would have been another ask wall here, but it looks like it got split to one of these two on the bid. And then you've got these kind of paired walls here at 138, 170. So there's at least 2. So we'll see. I mean, unless it's just one algo that's big and bored, you know, but I don't think they're going to spend too much time on this ticker. Looks like CETY is pulling back. And there we go. We would have hit our hard stop right there. So we'd be all out of this trade from 171 up to 208 minimum on all on the last shares right there. And then we've got 1, 2, 3, 4. We just need a 5th candle, and then we can consider a move to the upside for continuation, if and only if the volume matches and all that other good stuff. So I don't want to go too far down that hole. It looks like our EBI is pushing down. I'd like to see a retest of this box, but I don't think we're going to get that. Looks like the absorption's kind of stepping in here. Blah, right? Kind of crappy. I don't really like it when things step in early like that. Now, with that said, if it pops out of this box, that's another opportunity. So there's two places that we can look for trades on a chart like this, right? In this area. It's just logic, right? If it's in between two ranges, we can catch the breakout of the top range or a support bounce of the second range, and that's it if we want to trade it to the upside. If we want to trade it to the downside, we can trade that, or we can trade that. It's just logic, right? Because the advantage they provide is that they have defined risk. And ideally, these are drawn in areas where price has provided moves of violence in the past. Like this yellow box down here is beautiful. I love the price action out of this. It's an area of known violence. It's an area of high potential. And I need the price to come back to around this area at least, and then show the similar move, because I want this to happen to my money. That's the whole point of this. I want big moves to happen to my money so I can catch a small piece of it. I don't want small moves to happen to my money so I can hope for a bigger piece. That's not how it works, but that's what 90% of traders do. I just want to lock in consistent profits, get the hell out of the market, and live my life. I've been doing this for a decade and a half. You will absolutely develop a distaste for risk once your numbers get big and you see a lot of the ups and downs. So with that said, let me shoot over here, and I'm just going to update my sheet for the day. I still haven't gotten any response from Webull about that issue. So I'm a little bit weirded out about that, but we'll see. 191.84 was it? 191.84. Okay. So let me just put my numbers in here. All right. And then over here as well, our results. 184. All right. So if we go back to the sheet here, for those who don't know, this account had some sort of weird glitch on last Wednesday. I bought and sold shares. I watched the orders fill. I watched the thing go off. I watched my value go up. And then I watched all my positions go away. And then Thursday evening, because I don't stream on those 2 days, Thursday evening, I logged back into this account. I still had the shares. And I was like, oh, crap. So lost about $80 on that. Not a good time. But, it happens, and it's good to show a realistic example of, the kind of stuff that can happen in the market. And I'm waiting to hear back from Webull tech support so we can get that resolved. I don't expect them to reimburse me, but they do sometimes. But stuff like that can happen, which is why it's important to trim these accounts and just be careful, So barring that, I've only had one or two trades with quote unquote significant drawdown, which is what most traders end up taking a lot of the time, like a 10% loss or a 5.5% loss. Most other days are green and nice and consistent and achievable. So that's what I'm going for in this account. And hopefully you guys can see that there is, value in just being consistent and accepting, realistic profits that you can get over and over and over again. And more importantly, just committing time outside the market and not staring at charts all day. So on this account, I've committed less than, or just over half of it as far as cash goes. I put in $100 and I'm up $5.30. So on the $100, I'm up 5.3%. Overall, I'm up 2.84%. My goal is 1.5%. Therefore, I'm done for the day. And it's time for Pookie to ramble. But let me hear from you guys. What did you guys trade today, if anything? Or what tickers are you guys watching? I hate asking that because that's like, a lot of times it's people that just want to share a ticker and sometimes they're just holding something from a couple of weeks ago, It's a low float thing that just bottomed out, and then I hate having that conversation with them, but I like to hear it. Oh, you got him on speed dial? Nice. Oh, Chris M just got paid with meta calls. Good stuff. How's Tesla and Palantir today? Oh, that's beautiful. Look at that. Look at that. I'm willing to bet, right? This kind of move, right? It happens for a reason. I'm willing to bet that if I look back historically at that zone that I just drew, we're going to see some goodness. We're going to see similar moves at some point, unless this is just absolute new highs. I don't follow this ticker that much. It's this thin little guy right here, right? So I'm on a 30-minute time frame. You can see here it just got punched through a bunch of levels did. And actually, I'm just going to draw that because that was a beautiful move as well. But you can see the price bounced, just kind of propelled it there a little bit, not really significant. So got rejected here and sold down. This is the level I'm talking about, this yellow one. I'm going to make it yellow. Nice, beautiful reactions to this zone. I like it. And then let's see, when did this happen before? We got a couple ranges drawn on this one. Come on down. I remember when you were a trash stock meta. There we go. Nice, beautiful moves to the upside on that one. Good little bounce there. So yeah, I think we're in good shape here with that zone. I'll keep that zone on the chart. I kind of like that. That is nice. Every time there's a move like that, I just kind of want to poke it. I'll draw box and see what happens. Good stuff, Chris. Did your position sizing and everything align with your plan? Did you have any deviations today? Oh yeah, not today. I meant yesterday for Tesla and Palantir. Wall Street 72 traded CETY. Awesome. How'd it go? Did you use a deliberate position size and a deliberate buy strategy and sell strategy? Plan a harder cold? Yeah, we like that one. I think Lee likes that one for a swing. We both do. Cold and boil, right? They're inverse. So personally, I like it over like 37, 38. But if we can trade it to the downside, that's okay too. That's just my personal preference range on that one. But because you can see like the big kind of moves it produces off that zone. Yeah, I mean, just trading it up into there for reversion is good too. You know, you got a nice fib set up there. It's a nice push up overnight though for pre-market. IWM, you like the Russell? This one's been pushing up for a while. I drew lines, guys. I don't remember drawing any of these. I remember these two because they're recent. They were before that, or right after that retest there. But it looks like the retest held, right? Held and then pushed up. Yeah, I just straight up don't remember. Like this yellow line, I don't remember. I do remember the yellow, the blue and red box and this yellow line. I don't remember this line, and I don't remember this line. I remember this one and this one. So, that's awesome. Yeah, we like IWM though. Now you get a nice little 5 candle on this one. You get a 5 candle down, you get a 5 candle up. So it just broke. And then you get a 5 candle here, and then it broke. So this one's really nice on days like this where you get that whipsaw, where it's just kind of jumping up and down. Maybe small rotation into small caps today. Yeah, it's pre-holiday volume, so you're not going to get a lot of good juice on stuff. So you got to be super careful. Wall Street 72 used a medium position in at 182 and out at 194. That's on CETY. You were in at 182, out at 194. So you traded this. Ooh, sorry, I'm yawning today. So you traded like right here to right here, I'm assuming. That's good stuff, man. So you just got in and out. You were happy with a quick, easy profit. I love hearing that. I don't want anyone here to beat themselves up for either stopping out too early or taking profits too early. I don't believe those are things. Those are just kind of lies that we're told that convince us that we should take more risk and maintain more risk when we don't have to. So I'm super happy to hear you say that. There's no such thing as a stop loss that's too tight. If you just want to take 1 cent stop losses and you're able to take 2 cents or more every time you take a profit, awesome. Yeah, that's great risk management. But if you're taking a 3 cent loss and a 1 cent profit and you're doing that more often than not, and you're just taking loss, yeah, you're going to lose. So it's all about the balance. KSS, if it picks up volume and breaks 2120. Yeah, let's take a look at it. I got that one on the list. I could see that. So you're looking for a a little pop over. So I think this one already, it's already kind of setting up, right? It's just the volume. I don't like the volume. So the order book is stacked. It's nice. You got a lot of the volume algos. Like, see these symmetrical walls right here, the zone recovery algos. They're sitting on this one. They're waiting for that volume to come in. But I don't think that volume is going to come in until after it breaks over this. I don't think you're going to get like a volume rally and then a pop. I think you're going to get the volume to just pop over, do like a quick chain fill, like maybe up to like 21, 25, and then a pullback like immediately. So we'll see what happens on that one. But then I think the volume should come in after that. So we'll watch it. We'll go down to the 1 minute and we'll just watch it happen. Should be any second now. They're really loading up the 2118 wall, and that just got pulled. So there's our opportunity right here. So next candle or two, we should see that pop. In theory, that doesn't mean just buy in. That just means there's potential. So we have to wait for the actual confirmation. So we should see a big move up or down after this candle, what we just saw. So we got a sizable wall here, 2148. We got a smaller wall here at 2057. Let's see which one's going to win. So in theory, the ask side should be dominant. It should be pulling the price up. But we're seeing a lot of market orders come in. We're not seeing a lot of the order book fills. So interesting. So this is a form of like arbitrage, right? We see the setup should be doing one thing, but they're flooding in market orders instead to cause another thing to happen, and it's pulling the price in the other way. So that's a buy the dip opportunity, in my opinion, but not every sell down is a buy the dip opportunity. So we're going to wait and buy the confirmation, if anything. So we should see one of these two candles should have a big move. This one did not, so it should be on this current candle. So we got about 30 seconds for a big move, up or down, right? We don't pick that. If it's a move to the downside, we can expect maybe a push down to this box. Otherwise, probably just a quick buy up and then a rally over 21.25. Now, if that doesn't happen, that means it's just not there yet, and there's nothing we can do about that. So that move in either direction is going to be our confirmation. And it looks like we're not getting it. All right. So this setup is no longer valid. I don't care if it goes up to $23. It's not my problem. It's not doing what it should do, which means no trade for me, right? It's a risk off. Now, in these cases, yeah, sometimes you get these big, beautiful pops after you decide not to trade it, and that's okay. But that's confirmation bias, right? Because the exception of the rule is that it goes up and rallies and all that. And you only typically see that because you're still watching it, because you chose to stop out and you got like an identity attachment to the trade and whether or not you're right. So best thing you can do in that case is to move on. Get it off your radar. You copy it. Don't copy me. Don't you do it, Charlie. You do well enough on your own. I don't want you dealing with the stuff I do. All right, let's look at looks like CETY just got a nice little pop on that, but there's so much mess on this order book. I love it. It's ask side dominant, so this one also should be popping. But it's got some serious absorption issues right here. So it's got to get out of that range. June says, just scalped Ruby and made a nice 1.5%. I don't care that it popped, but I hit my goal. That is beautiful, man. Your hotkeys? Hell yeah. Are those working out for you this week? The way we broke them up on that call? Chris, you're an animal. Consistently making hundreds of dollars every day. I love it. But you're on a larger account. So that's awesome. You've lost understood. Well, our goal is to make sure that you can control one of those, right? Your profits can always be variable. You can always get more profit. You can always get less profit, but your losses, we can always make those less, right? June, this week's been looking good so far, hitting 1% per day with the new plan. That's beautiful. How far are you? How high up are you at this point? You should be up a couple percentage at this point. It's 2, right? And it looks like you're getting a little extra in there too. Chris M, I've been working really hard at risk management, slowly getting better. Absolutely, dude. I like your progress. You got all those investments that you've got and all that stuff. You're crushing it. It's just a matter of plugging 1 or 2 small holes in the speculation boat, and I think you're off to the races. Okay, SS broke over. Yeah, it's like a slow meander though, you know. That's sketchy, yeah. I think it would have to engulf on this kill and bounce over the line. Yeah, you need some sort of confirmation up here. Because remember, up here we were supposed to see a pop, a pullback, and then a rally with volume. So you got a quick pop, and you got some decent volume. It's still relatively weak, though. So somewhere in this mix, you might see a good chunk of volume. But it's not here now, so we shouldn't be in the trade now, in my opinion. We don't have to just jump into stuff. You know, oh, it's got potential. Let me just buy it. That doesn't work. You wouldn't buy every single house that you see that has potential. You'd be broke. You'd probably have a lot of lawsuits on your hand too. You get abatement notices and all kinds of stuff because you can't upkeep them. You know. Still sketch, that slow all day walk that I find so good. Lately I've grabbed a few that have crawled up over the whole day. Yeah, sometimes that happens. Sometimes you just get those ones that just have, you know, easy, smooth sailing to the upside. But I just don't trust these low float trash ones. I like KSS specifically because of its volatility when there's volume. That's one of the ones I'm familiar with. June, this week you're up 2.8% so far. That's awesome, dude. So you're 0.8 days ahead of schedule with your 1% targets. That's good stuff, man. You're about to offset Thanksgiving. Sorry, give me 1 second. Sorry, guys, just got an important DM. All right, sorry about that. Just had a little personal DM there. Your goal this month is actually 0.5% per day. That's awesome, dude. So you're, God, how many days? 3 days ahead at this point? 3.5? Charlie says it's a time suck and the climb is so horizontal anyway. By the end of it, I keep trying to keep that in the front when I can't decide on staying in or not. That works too. I mean, we don't need to trade the fast moving, you know, pops and drops, you know. If we do, there's ways we can make that less stressful as well. But I don't want anybody here to feel like they have to commit hours to charts. You know, realistically, if you're spending more than like 10, 20 minutes looking at a chart, you're giving the market too much time, in my opinion. And that's my goal, is to get everybody here, regardless of what you trade, whether it's scalps, leaps, spreads, whatever. If you're spending more than 20 minutes a day or more than a half hour a day looking at charts and trying to watch setups and time your entries and do all that stuff, a lot of that stuff can be automated, or at least you can set reminders to bring you back. So that way you're not staring at a chart and not focusing on your job or your kids or, you know, stuff like that. Go enjoy Netflix. Go enjoy walking around your neighborhood. Get your legs moving, get your blood pumping. You know, it turns to sludge if you don't actively move it. That's why compressions are more important than rescue breathing in CPR now. Like the blood movement is super important. And if you're like at home and you're just sitting in front of a computer all day, that sedentary lifestyle, you are at such a high risk for, DVT and things like that. So you got to take care of your body. I don't care what your P&L is if you're in the hospital because you were deconditioned, so make sure you guys take care of yourself, hydrate, try to maintain good posture. It's not always fun. It's not always easy, but you have to take care of yourself. I'm also going to draw a line right here on CETY. So here and here are kind of the range that I see for the day on CETY for right now at this point going forward. Yeah, breaks matter. Give your eyes a rest. The 20-20 rule. Like look at every 20 minutes, look at something 20 or more feet away for 20 seconds. It's 20 seconds. You can commit that. You got to take care of your eyes. It's all part of trading psychology. If your brain is inefficient because you're not taking care of yourself, which the bar doesn't have to be very high. I'm not saying you got to be like a gym rat, super freak and macronutrient, jerk, but take care of yourself. Just basic stuff like hygiene. Make sure you're taking care of yourself so you don't get sick. Sleep as well as you can so that everything has a chance to recover and you're not distracted and foggy headed. Take care of your posture, take care of your limbs, cut your fingernails so that when you're typing, it's not uncomfortable. Like just little stuff like that. Clean out your ears so you're not distracted, while you're trying to trade. Try to control your environment a little bit. If you've got a bunch of noisy stuff that you can control, I'm not saying get rid of your kids, but like if you've got a bunch of noisy stuff or a bunch of distractions in your environment, reduce it. The goal is to keep the brain as de-stressed as possible when you're trading so that you can be automated and you can let the chart drive without your ego kind of feeling like it has to step in. And I don't mean ego like arrogance. I mean, ego is the part of the brain that controls impulsive behavior. Thank you, Freud. You're kind of working against yourself if you're diminishing your ability to do that. So you got to just commit a small amount of time to the market and just stop caring. Like you have to care less than you care when you started trading. Like that's the big secret. The more you care about the market, the worse you're going to do. Okay. It's got to take an appropriate role in your life, which means just shoving it in the back seat and focusing on driving. And that's exactly, that's a really good point, Charlie. And that's why we teach. Like that's why we have trading coaches, and that's why I do psychology stuff in Lifetime more than anything, because that is really where you're going to see the progress. And we've seen that with a lot of you guys, Master, Snowflake, Junjun. Like one of my recent, like Junjun and I didn't really talk that much. Like he's been a Lifetime member and I've been in Lifetime, but we DM'd a couple times and that was about it. And then we had a one-on-one. And the dude just flipped his trading upside down after like one call and he's crushing it. Like, that's what I love seeing. And it wasn't like we weren't looking at charts. We didn't do anything with the charts. It was just a mindset shift that he had to have. And he came up with all the answers all on his own. I just asked him some questions, but it's all psychology at the end of the day. This stuff on the chart, this is just shapes and colors. It's literally just stuff moving up and down. We don't even need the chart. You guys know that. You guys that were in Chicago know that because Tammy, like it wasn't even me, I didn't even, I pushed like one button, but I had some of the members that were with us in person come up to the podium and just trade blindly without a chart. I think, what was it? Latvian, Tammy, Babu Chris, and I'm going to feel bad. I can't remember who the last one was. Oh no. Chag, yeah. Thank you, Tammy. You saved me. He was going to be so mad at me. But they came up to the laptop and just pushed buttons based on just the percentage move. It wasn't even like they didn't even have the chart. We had the order book, the time and sales, all that stuff. They just pushed a button and then pushed another button. Austin lost his shit, but Tammy had an easy time and she made a net profit. He will never Chag. I've invoked the wrath of Chag. Oh no. All right, so we're back down to the box on CETY, and we're starting to get a little bit of a breakover. So if I were to trade this, let me just grab one share here. Oh, that's weird. Oh, why is that? Oh, because I didn't check the box. Okay. It's like, I know I got settled cash for that for one share. So again, you know, we're coming out of an area of high potential. I don't need a big move. I just want to get this to like 1 to 1.5%, and then I can just lock it. That's it. If it goes down, I can always stop out. If it goes up, I can always exit. That's the whole point. My job now is just to get out, because I don't want to stay in the market. I don't want that stickiness. And once you figure this out and you get that distaste for risk, this whole process gets a lot easier. Snowflake just nailed it. Once you get the learning done and get to that back off point, it's beautiful, because you just realize you're trying to grab onto like a house fire, like you're trying to hug a house fire. It's not going to work. It's just going to hurt you over and over. Like, your job should be finding stability and purpose outside the market. This is just a glorified side hustle. If you do this and DoorDash, you should do more DoorDash, in my opinion. Because the closer you get to this, the more it's going to get into your identity, and the more it's going to demand from you, and you're going to give it. And that's not healthy. Yeah, Chris, I think there's something. Just if we look at like SPY, for example, you can see there's compression here. Now it's on reducing volume, so it's more indecision, in my opinion. Oh, look at that. Looks like CETY kind of pulled back a little bit. Oh no, my profits. That's okay. If it breaks out of this box, I'm out. Otherwise, I'm going to stay in it. And we'll see where it goes. If it breaks back out, I'm actually going to add one more. There it is, Snowflake. 4.89% up overall for the day. 20 minutes in and out. Hell yeah. That's your regular job, door dashing in stocks? Yeah. But I don't want you to spend, 8 to 12 hours doing this and not DoorDash. Yeah. You're going to get more money out of DoorDash for now, and then out of the market with less time later. But for now, just getting those small percentages that add up, I'm out. So I took a little hit on that. That's okay. Still up 2.71% for the day. But we follow the system, right? The system is find an area of high potential, take a risk that makes sense, and we did on the breakup. Now, it wasn't quite in the box, but that's okay. It's still close enough. We took a risk, and then the risk worked against us, so we exited immediately. No questions asked. I had a plan to add one more, but that didn't happen. So now if the price comes back up, we can take another risk if we want. Otherwise, the chart is telling us it's not time to be in the stock. So there's no point in jumping in. Oh, you dashed too? I thought about it just for fun. I don't have time. I just can't do it. It's not worth it. I got other projects and stuff. And the kids and all that. Firefighting and stocks, Russian risk all around. Jeez, yeah, I can imagine. So let me ask you a question. As a firefighter, what happens if you put out a house fire and then you just stand there for 12 hours spraying the house? Like, that's wasteful as hell, right? You're going to get in a lot of trouble. But that's what people do with the stock market. They go in, they accomplish their job, and then they just keep doing it. Like, they just stay at work after they've clocked out. After the task is done, they just keep spraying the hose. You got to run out of water, right? And that's what happens. You run out of money in the market. You don't need to use all your settled cash all day, every day. That's not healthy. Yeah, mold. All the mold. Absolutely. I mean, eventually you'll just break the house down. Oh, Top's got some nut. Let's see. Oh, okay, I see it. So you get a little $6, $6.40 range right? Let's draw that. Right, so they're going to want to trade this inner channel here. 636, let's plot that one. I don't even know where this line came from, but it must have been a long time ago. So we got yellow to yellow, right? Let's draw that. Let's make this yellow. And we'll make this dashed. And then I'm looking for the lower, it might be 615 here. That's kind of a crappy accumulation zone in my opinion. All right, so this is the zone. And then when it breaks out, then they have their algo set up to capture it in both directions, right? So if we want to scalp something like this, we need to catch it as it's moving up over 615 into this level here at 636 and then 640. So low float stock, super sketchy, good volume though, but it's got to be a little more directional. Snowflake says, oh yeah, I got 60% of my cash left. That's beautiful, dude. Hell yeah. I think you and I are probably, oh no, I have less than 50% because I used $102 today. It's good stuff though. That's awesome. You're up and you're out, right? Get in, get yours, get over it, get out, get over it, I said. June says that's where I'm at now, or I'm trying to make sure I have 25% settled cash every day. That's awesome. Just 1 or 2 trades, right? Just get in, get your target. If your first target or if your first trade hits your target, you can be done for the day, right? Definitely in the past felt like I needed to use it all. Absolutely. And that's kind of where, like, that's a fallacy, right? It's a logical fallacy. So I get asked all the time. It's like, well, Pookie, what's the difference with, doing 1% per day on, your whole account, or just using like smaller buys with bigger numbers of buys. So like 4 25% trades and just getting 1% each. And why would we have to wait till the next day to blah, blah, blah? If we hit our goal, why don't we keep trading? And the answer is very simple. If you can, go for it. If you can't, you're going to hurt yourself. That's why. So if you can hit 1% per day and then exceed that, I encourage you to do so. If it's something you can do safely and it's something you want to do, go for it. You don't have to wait for the next day if you can achieve that. If you can't achieve that, or if in not achieving that, you're going to hurt yourself more, then why would you put that risk on the table? Because that just means that you don't have the discipline yet. You don't have the discipline or the skill set in alignment, right? So you're just going to hurt yourself just because you want to make more money because you don't want to wait till the next day, right? So the answer is, you have to answer your own question there. Why are you in a position where you're just trying to get like 1% per day as a new trader? Because what you've been doing hasn't worked. It's not achievable on a consistent basis. And that's where this stuff comes in. That's why I focus on this stuff, because this is what newer traders need. They need that mindset shift to realize that they're just drowning in shallow water for the first year or two. And then if they survive, they learn to slow down. That's what it boils down to. And I know it sucks to hear that, but is it working? Like, we can very easily trick out these small accounts. You guys have watched me do it, but is that something everyone can do? No. Exactly, Snowflake. We all started out doing it backwards. I did for longer than I care to admit. Hell, my mentor wanted me to lose my money so I could slow down. All right, looks like we hit our 636 on NUKK. Now there's another trigger here at 643. So let's see if it pops out and breaks over that. That'll be kind of the next range. There we go. All right, so basically anywhere above here up to 659, I'd be looking to take profits right there. At least early profits, right? There you go. You're right back in the range. So sketchy. So if you're scalping, you got to lock those profits fast. Oh, 640. Yeah, good stuff, man. So 640, he hit it right on the dot. Took his profits, I assume, or at least a chunk of them, because there's still potential here, but you could always lock the bulk of your shares, right? Good job, Top. I love that. Easy move. Yeah, exactly, Charlie. We do it I wouldn't say 100% wrong. We do it inefficiently, but we have that confidence that says that we're doing it right. And that's just because we're so conditioned by every experience we have outside the market that if we put more work in, we get more money or more compensation, and that's not how the market works. I would love everyone here to just slow the hell down. You know, you don't need to be trading naked options if you have a $200 account. That's you're just going to hurt yourself more often than not. Now, if you've been doing this for a while and you can manage that risk and you can do it efficiently, I'm not going to stop you. But if you're constantly depositing paycheck after paycheck and you're constantly losing it in the same spots, it's time to start looking at some of those data points. Snowflake, have you ever said to yourself, I just need a few big wins, then I'll have enough to trade more with more capital with less risk? Absolutely. Absolutely. We got a built-in part of our brain that wants us to do that. We're trying to find that safe territory where we can make enough money, right? And it doesn't work because you never get there. So rather than doing that, rather than doing what 90% of traders who fail do, I'm going to do what the banks do. Because I know they make money and I know they're not fools. Like, said that for 5 years. I mean, the fact that you're in the market after 5 years of that, I applaud that. That's awesome. How is your trading going now, by the way? I know we haven't chatted much. But I know you had your frustrations there. You and I talked quite a bit about that, and I'm glad you stuck around, dude. Oh, your account's up 30% in 5 months. Hell yeah, dude. Is that passive income? Or a mix of both? I would say 30% in 5 months is awesome either way. But yeah, as I say, that's purely passive income. You're doing something crazy. It's a mix of both. Okay, good stuff, man. That's beautiful. Compare this to, a year or two ago, our conversations we had back then. I'm so happy you're here, dude. Do you feel like slowing down has helped and just nailing down that consistency and not caring about losses as much because they're not traumatic, Do you feel like you have a system in place now or just a trading plan? We're going to bump sad boy or what? I'm still waiting on that one. I'm an investor, so I'm okay to hold that for years. I know I said it was investor heaven, speculator hell on that one. And that's exactly what we turned into, right? There were so many people frustrated because it just wasn't moving yet or moving in the direction that they wanted. And it's a project, I'm not in on all the moves that happen, but I do see the potential and, I put my risk in there and I'm letting it sit. There we go. 659 hit on NUKK. That would be my all out right there. And I'd just walk away personally if I was in that one. I know Top's kind of an animal, so he's probably going to sell at like $15 or something, but that would be my good enough. And, from down here at 615, that's 7%. That's good enough. Bebnet says, definitely an internal battle. And yes, for sure. For me personally, quick trades burnt me because I couldn't react and think quick enough. So I slowed it down. That's perfect. So you're doing swings, I assume, or slower moving day trades. That's awesome, man. Yeah, you guys don't have to trade the fast moving stuff. I do that to show you guys proof of concept and kind of how I do it. The same exact concepts apply to swing trades. And then you can layer option strategies on top of those if you want to do those. Like it's the core concepts don't change. Tap says, me too. I have almost 16 million coins, so I'm ready to stop buying when I hit 20 million. That's, dude, you probably got a hell of a discount. It's not going to take much for you. That's awesome. Bibnet says, yes, both. All right, good stuff, dude. Yeah, this thing's up to 674. NUKK, that was a great setup, Top. I don't know if you're still in, but you got a nice little 5 candle run forming as long as this candle here makes a higher low. But we had our initial take profit. We got our secondary take profit on that impulse. Nice clean pop up to that level. And then we're starting to see more potential here. But at this point, it's just moving up stop losses, in my opinion. 25% left. Good stuff, dude. I'm happy. Good stuff. With that said, though, I do have to jump off of here. Let me end the live stream. And yeah, always take the upside and protect the downside. That's our job. And if you allow the drawdown, that's okay. It's a choice. But if your plan was to not allow drawdown and you're allowing it, you got to really sit on that emotion, like sit in that experience and figure out why you're in denial, because that's what's hurting you. It's not anything else. It's just that denial. Profits don't take you out of the market. It's always the losses. Okay. So focus on the losses, make them small, make them insignificant, and your trading will improve over time. Okay. But you got to start with your brain. Your brain is where it all comes from. All right. So let me end the stream. I'll hang out with you guys in Discord here for